Good day everyone, welcome to the live stream. I'm trying out some new software, so bear with me if it's not quite the best software and if it's not working that well, but let's see. And we'll see if the camera works and all that sort of thing. I'm trying out some new software, so bear with me if it's not quite the best software. Okay, fantastic. That seems to be working. Please just type up in the chat box if you can hear me. Just give me a yes, W-Y-E-S. Let me know that you can hear me. So that it's all good. Thank you, Blue Jail. Excuse me for leaning over here. Thank you, everyone. I'm just seeing if I can give away some memberships. No. Fantastic. All right, so we start in about 3 minutes time. I hope my image is a little bit clearer this time. I'm using Streamlabs instead of StreamYard, and it seems to be a problem with the software and so on and so on. And I don't even know how to get these chats up on the screen like I usually do, but I'll greet you all one by one in any case. So welcome, we'll figure that out later on to show the chats on the screen. But it looks like the picture looks good to me across there. On the laptop, so far so good. And so welcome Aju and Blue Gel, lovely to see you, and Martin and Andreas Graf, quadruple one, and John Brennan, welcome to you too. Not sure if we can get these up on the screen, I don't think so. Good day Amit and Javier and Hamid Malik and Javier Ramos, lovely to see you too. And Erica, and Ellie, and Akmal. Good day, everyone. So let's start in a couple of minutes' time, about 2 minutes from now, and we'll go through all of the currencies and commodities and stocks and so on. And I guess we'll start with natural gas. Why not? But we're going to wait for everyone to catch up and come in. And I think everyone's working quite well, considering. Ajit, I'm sure you do want free membership stuff, but there is none to give away right now. So it doesn't work like that. You get a free, I can give out 10 free memberships a month, and they're allocated to people who are active in this chat, participants in the chat, and automatically allocated by YouTube. So there's nothing I can do about that. The video and audio not in sync. Okay, fantastic. There's obviously a feed delay from the camera to the stream. Maybe it's a cabling issue. Anyway, it doesn't really matter, but at least we've got some visuals and we've got some, everything's working, everyone's in. Good day, Luna from Poland. Lovely to see you too. Good day, Martin. Welcome to you as well. Hello, Martin and Fariba, lovely to see you, and Lucas from Holland, lovely to see you as well. Just switching across to my charts a wee bit now, and I've got about a minute before we start. So folks, if you've got any questions, please put them up in the chat box right now, and I'm going to go through a couple of things, maybe not everything, and I'll try in this session to respond to more questions than just presenting a monologue, which may bore you. So I'll go through a couple of key things that I'm watching right this morning, and then we'll get into some of the questions about the sort of longer term plays that we've got on. So it is now 8:30 a.m. Eastern Time, New York. So welcome to everyone here. Welcome from India, Joydeep and Lucas and HR. Let's get into it. So put your questions up in the chat whilst I'm talking, and I'm going to go through a couple of the things. Now, early this morning, I'm going to start with natural gas. Early this morning, we took a short trade. We actually closed our long trade on natural gas, our short trade. We had a short trade from before the weekend. You may remember, after that big candle there is the rollover gap. That's not actually a candle. It's just the rollover into the new contract. My broker rolls a wee bit early. And please just, again, put something up in the chat if I drop off or if you can't hear me, because I can't see what's going on managing all of this stuff myself. So if you have any problems with the sound or the audio or the picture or anything like that, just please put it up in the chat and hopefully that'll catch my eye. And maybe I need this other thing on the other side, actually. Let me quickly just move this. It'll make life a lot easier if I move my iPad over here. Ah, that's better. Okay, now we're getting organized. Okay, so let's have a look at natural gas. So let me tell you what happened. This is a rollover gap. I've now rolled over into the new front month contract, and Henry Hub rolls over tomorrow, but we have rolled over already. And I shorted at the top of the rollover gap there. After that one down, one up candle reversal pattern, we gapped up over the weekend, back up into this order block, just below that swing high, but above the trend line, and this trend line goes back some time. Let me draw this on the day chart for you. There's the day chart trend line, and we closed really on it on the weekend and at the 100-period moving average. Instead of gapping down off that resistance, we actually gapped up ever so slightly. You can see it's a very feeble sort of trend line, only 2 touches until now. Now, what's happened with the roll, the weekend roll, not the contract roll, we gapped up ever so slightly, and then we collapsed right back down again. On the 4-hour chart, you can see what happened. Gap up over there, and we moved back down. Our entry price is exactly where the red arrow is, but across to the left. A few hours ago, at sort of 4 or 5 hours ago, I exited the short trade at break even because we were going sideways, and then we got this big bearish candle on the last 4-hour candle, breaking back down below the trend line, but closing just above it, but forming a reversal and a sort of a 4-hour tweezer top over there. This current 4-hour candle is now moving back up into the order block, only a small move, just to really where we closed on Friday, and not up yet to that high yet. So we're now trading the front month, or the next month on the futures contract, and we're trading at 3.72. We're short at 3.66. We were short at 3.68. Now, what's going to happen from here? I don't know. We're kind of in the middle of a sort of a longer term range, which I think is between $3 and $4. Thank you very much, Robert. I appreciate that. This is a new streaming software, guys. If you came in late, I was using StreamYard. Now I'm using Streamlabs, which is gaming software, but it's much, much better and cheaper. So I got a little tip from someone in the process of trying to get all this going. At some point, we'll get all the bells and whistles and gadgets going. So thank you for the comments on the sound and picture quality. I think it will be better, at least better than the previous arrangement. So what could happen now? Remember, we're in the middle of a range on natural gas, and I do believe the new range is between $3 and $4 for the foreseeable future. We've moved up from a range from around about $2 to $3 into a significantly higher range, and we're trading right in the middle of that range right now. And so any trades that we take right here, as I always say, we're diddling in the middle. We're not near the top, we're not near the bottom, but we are closer to the top, considering that I think the top's around about $4. We're closer to the top than we are at the bottom, to the bottom. We're trading at 372. Back to the day chart. Let's see where we could get up to and where we might need to hedge. Now, we've got a swing high up here on the futures at 3.83. Slightly below that is sort of 3.8. We're currently trading at the 375 level, which is a really key and important level, also shown here by this market structure break. Yeah, you're right. OBS and Streamlabs the best. So there's the market structure break, the 375 level, which we always have an eye on natural gas. It's a very key long-term chart level, and we're trading right at it right now. The market will decide at 375 whether it needs to go higher or lower, and we just don't know that just yet. We've got some order blocks above us, and that swing high at about 384, and I'll be tempted to hedge this trade if we break and close above this red order block. The top of that order block is at just under $3 really, 394, something like that, and we've got a much bigger order block up here. So it's kind of tricky because we've got lots of resistance above us, and we've got key supports below us as well. And all these moving averages, the 200, the 20, the 50, we're right at the 100-period moving average, and we've got various other supports that we've been trading off on an intraday basis up until now. Down here into these order blocks, providing support. There's another one down here, $3. Then we've got 325, we've got 340, and so on. And you can see how the prices reacted to all those levels previously. So where do we go from here? I don't know. I'm going to stick with my short position. It's a 20% size position, so it's pretty small, and I'm willing to add to that position either direction. So if we do go up, and we don't break and close above that level, which I said would be my line in the sand, that's probably the top of this order block, and maybe it might be $4. We'll have to just play this by ear. I might be tempted to let this run to $4 and just above, but it's only a 20% position. I'm looking to get more size for the short journey down, for the move down. If we do start moving down right now, and we don't get higher up in order for me to, and give, for the opportunity to add more size, then I'll have to add on the move down and add to a winning position. And if and when we get some reversal candles heading down our way, if we start getting some momentum, if we start breaking down through some of these levels, I'll be adding onto my short position. So I can add up or add down. Either way is acceptable to me at this point because I have a smaller position on board. So that's where we are on natural gas. Now, remember, this is also offset by a short trade on gold. On oil. Oil and gold always go together. This is our trade on gold. Why do I keep on saying gold? I think it's the old American, guns, oil, and gold in the back of my mind. So you can see my short position on the chart there on WTI, on oil, and we're now moving down. That position's in profit. And sometimes natural gas and WTI, quite a lot of the time, move in opposite directions. So in a way, the fact that we're short on both of these is a slight hedge. Now, a lot of people have been asking me, why have you been hedging so much over the last couple of weeks? And I think the answer should be obvious. The hedging has been required more so than usual. I'm a hedger naturally, but more so than usual, given what's going on in the marketplace and what's going on with uncertainty, blowout highs on stock markets, Trump tariffs driving us down 25%, back up 25%, all sorts of moves in the energy markets. Look at uranium on the left-hand side of your chart. So we'd be doing a little bit more hedging than normal, but there's a good reason, as you know, because the market has been particularly dangerous and difficult. So the fact that we're short on oil and short on natural gas in itself is a sort of a hedge, although these two commodities, energy commodities, aren't perfectly correlated by any means. Maybe like a 60% correlation, something like that, maybe 70%. But we're short on oil and we're short on natural gas. In other words, one of them will probably move up and the other one will probably move down, but about 60% of the time. Excuse the frog in the throat again. I still have not kicked this flu, believe it or not. So WTI is moving down. We've got some supports we've got to get below. First of all, this key support at $60. It's a big round number. It's a nice one. So we've got to get through there. My overall idea is that we'll carry on moving down. Let's go to the day chart. I'll show you where my targets are. There's the Moab level, mother of all breaks, the key break in crude oil, taking us down into what I now believe is a new range between $50 and $70. And we were trading in a higher range, I suppose, between almost $70 and $90, something like that. So we've moved down a range, I think, in WTI oil and up sort of a block, a range block in natural gas. So this is where we're trading. And note, like natural gas, we're kind of trading in the middle. We're not near the top, which is at this Moab level, closer to $70. I'm allowing for a move up to the 200 period moving average, the 100, all these levels here, and the Moab breakout point. Notice that despite the fact that we've had this very strong breakout down to the bottom of this long-term channel, we have not retraced yet to the, as some would call it, the scene of the crime. I'm not going to say that anymore. Someone says it way too often, and it's caught on. We're not going to return to the, let's call it, we basically got to get back to Moab. I prefer the saying that someone taught me the other day, a fellow trader, prop trader. I prefer the term to revisit and kiss goodbye the level that we just broke. So return, say goodbye, kiss goodbye, and return, resume the downtrend. So most of the time when you do get strong breakouts, the market will often retrace back to the breakout point, which is this Moab level, mother of all breaks, and then resume the downtrend. We haven't got there yet, but we did turn around early and made a double top, against which we traded short. I did put my first blob in there saying maybe we won't get back to Moab. Often we would do, but maybe we won't. So I had that blob drawn in there from many, many weeks ago, and this one is still here at the top here from many weeks ago. As it turns out, we got to the lower blob, but not the higher one, and we have moved down. It doesn't mean that this is going to carry on moving down, of course, and I still think it's more likely that we'll retest the Moab level, $67, $68, maybe 69, 200 period moving average, order blocks, and at the extreme, the top of the channel again. And if we moved right up there today, right this minute, which won't happen, that would take us all the way back up to $75. But as we go along, the channel top is sloping and angling further and further down. And so as we move up towards it, if we do, we'll be slightly lower than $75. So there's all sorts of upside areas where I think there would be good shorting opportunities. This one that we're in now is not the best one. In fact, it's the worst. It's the earliest, the soonest, the most, or the cheapest, should I say. We want to get them. We want to get a higher price really to short this properly. So there we are in oil and gas. Thank you, Martin. Appreciate that. So the stream seems to be better, folks, with this new software, even though, as someone pointed out, there might be a slight lag between the picture in the camera and the audio. But that should not be too distracting because most of the time you're looking at the charts. So there we go. Short on WTI oil, short on natural gas, looking to add more positions to the natural gas short, and also looking to add more positions to the WTI crude oil short. Right, I think that's covered it. This is the, don't worry about the chart in the middle here. That's a natural gas continuous ETF at Pepperstone. We're not trading that anymore. We got long there, we got out at the top. That's all that we had on there. We got no more trades on there right now, but we're now short on the futures, which is this chart on the right-hand side, the one that's highlighted right there. Excuse me once again. Now on uranium, we're trading URA and UEC. There are other instruments you can trade on uranium. These are the most common and the easiest, I suppose. And uranium's moved right up now, even in today in pre-market, we're right up somewhere here at $33, $32.85. We got into this trade just above $20. So we've almost doubled the price of URA since we got into this trade. Another few dollars up. No, not quite. Well, we need to get up to $40 to double this, double our entry price. Maybe we'll get there pretty soon. Target's way up above. This is going to be zigzaggy. This has been incredibly and undeniably strong and moving fast. So we should get a retracement at some point. We've got lots of opportunities. First of all, the breakout point here, this yellow block down to about 29, just below 30. And then we've got this big gap that we left behind. And it looks like we're forming another rollover gap right here. So if we open up at this sort of price right now, we'll have another gap below us, two gaps which may need to be filled in the future. Don't get FOMO'd into going long on uranium right now because you'll regret it. There will be retracements. But having said that, if you didn't get long on uranium, somewhere around about the time when we did, you probably or may have been locked out. Now, this is UEC. Look where we're trading, $7.05. We got in at $4.74, and that's now also gapped up in pre-market. Another big gap there on UEC and forming one as we speak. So don't get dragged into buying these at the current price. We've got two gaps below us on both of these instruments. We've moved too far, too fast. There should be a retracement. We've also got earnings coming up on UEC and so on. And I'm getting some messages in my private group. If you're in my private group, hold back on that, please, until we finish the video. So that's it on energies, folks. If you've got any further questions on that, please ask me and put your questions up in here because I may not have covered any points that you want to cover. Now, I'm not going to talk too much about some of the other things, bearing in mind that we'll get to some questions later. And I'd like to pay more attention to your questions than tell you what I think about what I want to talk about, which is the least important part of the stream. It's important that you get to know the answers to your questions. But just quickly at currencies, we're long on the euro, two tranches on there, both in profit. Well, that one marginally. Let's open up this screen a wee bit. So we're long from over there at around about 1.12. We're also long from 1.1340 something. I can't remember the exact number. Actually, both of those are in profit, one of them more than the other. That's a couple hundred pips on that, 150 pips on the lower position. So my target for the euro, let me just quickly go back here. My target for the euro, best shown on the weekly chart, and is right up into these blobs, which I've had drawn in here forever and a day. There's the big sweep below support, cleaned out all those very exuberant bullish hands. Look at this, move down, move up, big flagpole, very, very long sideways bull flag, cleaned out, wiped out through the bottom. All those trading that pattern will have been disappointed with that move, and then promptly back up again with a massive rally all the way from 1.01, and we're currently trading at 1.13. Now, our target is here at the 78.6% Fibonacci level, but given the fact that I think the dollar index is on its way down towards 93, I think we could see this moving up to 1.2, or even slightly higher up to this level, this previous swing high at 1.23. That's a long way above us on the euro. But nevertheless, I think we could get there certainly to 1.18 and the 78.6% Fibonacci and the top 200 period Bollinger Band. And I've still got a big question mark drawn in there because I don't know if we'll go higher, stop at the top, stop in the middle there, 1.2, big round number. And that would also be at the point where the dollar index has reached down to about 93. So let's go and have a look at the dollar index. And I'm going to switch to the weekly chart on the dollar index and show you that we have exactly the same pattern as the euro, but the inverse. I don't have the Fibonacci's drawn on here below us, but look, if you swap that euro chart around, we have, in this case, a move up, flagpole down, sideways bear flag, clear out through the top, wiping out everyone who is trading that pattern, making space for more shorts to be added into this trade and for the institutions to get short with all of the retail money and various other money, hedge funds that weren't doing too well. Anyway, plenty of money to be grabbed here to short the euro, short the dollar, and then for a move down. So now that we've cleared out, just like the euro, broken down through the Dixie Moab, very similar to natural gas, I think we could get down to these order blocks down here. And I wouldn't be surprised, actually I'm going to get rid of this, I'll leave that one in. I wouldn't be surprised if that's also the 78.6% Fibonacci level. So let's quickly have a look here. And just to verify my, okay, not quite there, but pretty close. So there's the 78.6%, there's the lower 200 period Bollinger Band, and there's that order block. So somewhere down here, 93, 94, 95 maybe, but I think probably 93. And that would take the euro up to 1.18 and then potentially 1.2. So that's where we stand on Forex and currencies. The only other trade that we have on is short the euro yen, and that one, once again, is frustrating. Oh, we've got another trade on the Aussie. I forgot about that one. I'll get to that shortly. The euro yen, once again, creeping back up. Still waiting for this to move down to 144 to complete this technical pattern. The longer this goes sideways, the more likely it is that we'll have to smash up through the top, clear out some of these short hands, very similar to what we saw on the euro and the dollar index. The clear out, making space, grabbing liquidity, and then the reversal. Maybe we'll have to see that on the euro yen, in which case we'll have to hedge. I think if we break above this recent swing high at roughly, and hold above there, at roughly 165.22, we'll have to hedge our short position there. And of course, this is costing us money because there are overnight carry costs which are beginning to add up. The other one that we're long on is the Aussie dollar. We've talked about this plenty of times, and I was waiting for the symmetrical pattern to form. This would be an inverse head and shoulders pattern, big spike low, clear out, and a move up. Beautiful sort of technical formation here, but we may be a little early. And I did move this red arrow across to meet us where we were after we broke out through the top there at 0.65. And I thought maybe we'd get going early, but maybe not to be. Just ticking down a little bit today. And maybe we have to wait for a symmetrical pattern. Now, if I just grab my measurement tool here, I've got a pretty cool tool here on TradingView. And if you've got TradingView, you can do the same yourself. And just use this bars pattern. I'm just going to grab that, make a replica of it, and drag it across to this side over here. You see how far we could get across before this becomes symmetrical. So maybe we have to wait all the way to here with loads of tests to the downside and the upside until we get to this sort of area here. That would take us until the end of July. I don't really want to be holding this trade until the end of July. I'd rather allocate that capital elsewhere and use it for other things if this doesn't get going soon. Anyway, we're long. It's in a little bit of profit. We'll keep an eye on that one. That's the Aussie dollar against the US dollar. Right, now stocks. I don't know, what can I say? Basically, I'm bearish on stocks until or unless these recent all-time highs at the double tops are defeated. This is the NASDAQ all-time high double top over here on the left-hand side of the screen. And we've moved down 25% or something like that. Can't remember the exact number, 25, 23, 27, can't remember what it was. We've moved back up again. This is a typical bull run in a bear market. In other words, a dead cat bounce potentially, or just a bear market rally. This is not extreme. This happens quite a lot. This one was at extreme pace, but this is the sort of thing that happens. We have a double top. We have a bear market confirmation because of that breakdown. And now, or a bear market initiation, should I say, not confirmation. The confirmation will be if we make a lower low. So right now we're looking to sell as long as we're underneath these highs. It's possible we could get a slightly higher high. Now, what I've got along here is another dotted line, which may be difficult to see, which is the center line of this long-term channel, which, bear in mind and note that we've now broken back inside. So we're now back inside this upward sloping bullish type channel, and we're above all these moving averages, particularly the 20, which is curling up underneath us. Look at this dotted line at the center of the channel, and look at the top 200 period Bollinger Band right there. This is a key level, and even if we break above these highs but reach the channel center line and the top Bollinger Band, this could still be a turning around area for a move down, as long as we don't sort of start moving up through there, up towards the top of that channel, which means that we may have to get much, much higher on the NASDAQ, the top of this channel. And once again, I've had these blobs drawn in here for ages, and it's still there. So there it is. That's a potential target if we do break up and keep moving up higher. And that could take us all the way up to, if it happens quite quickly, 24,500, 25,000. And my target at the bottom side, if this is a bear market and we carry on moving down, is below here, down into this level here. So that's where we are on stocks, folks. As long as we're holding beneath that double top high on the NASDAQ, double top all-time high. Same thing goes for the S&P. Very similar chart pattern, as opposed to the German 30, which is very different. There's the double top all-time high on the S&P, almost a triple top actually, maybe a quadruple top, maybe a king's crown top. Top, 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 top. Maybe I just need another one to make a sort of a crown pattern there. It did move down after that crown formation, but that's the all-time high. The top Bollinger Bands above us up here. Don't know why that red arrow is there. And we could move down from any of these levels, very similar to the NASDAQ. Where we are right now, we're short, we're in profit, of course, but we may have to get up to the recent all-time high, or we may have to get up to the top Bollinger Band and retest that higher, much higher level. So I don't know. Nevertheless, we're short on the S&P, we're short on the NASDAQ. You can see our positions. They're both in profit, maybe not for long. Actually, the NASDAQ is probably just sneaking out of profit or just about break even right now. We're also short on the German 30, and I did point out that we reached the top of the channel, not quite. Top-ish, you might say. So almost to the top of the channel, even though we made a new all-time high, breaking above the double top all-time high on the German 30, we have not broken out of the channel. We have not exceeded the channel top. And every time we've got to the top, every time we've got to the bottom, we've reversed, even on that big spike down with Liberation Day. So we're now approaching the top. Do we need to just kiss the top and move down? Even though we're at a new all-time high, there's no longer a bear market, but we're still in the channel and we have not broken out through the top. We have not broken out through the bottom. And this channel goes back as far as 2022. So that's where we are right now. And overall, I'm still quite happy with this trade basically until unless we break out and close through the top of that channel. And I think with all of these, and particularly the German 30, maybe we need just one more spike high through that channel and a big reversal candle, or a big spike wick candle, or a bearish engulfing candle, something like that, or an island reversal, any sort of pattern that might confirm a top in place. Right, we're also short on MSTR, and we're also short on QBTS. Not going to talk about QBTS too much. It was a bit of a sort of opportunistic play. We went long, we took profit right at the top, and we went immediately short. I'm using the profit from the long trade to ride this down, back down towards the breakout point. I want to close that gap. I'd like to see that gap closed and a bounce off the channel top and the 20-period moving average, and I think we could achieve that. Now we're currently trading still more or less where I got into the short trade, but the risk on this short trade is covered by the profit on the long trade, and my overall idea and direction for this is long. I think this has got a good impulse move in it, and we could get going much higher. But I do think we've got to come back and collect some more orders down a bit lower down, and perhaps clear out some of these over-exuberant bulls that have got into QBTS. And at the same time as well that we're long on Bitcoin, and we'll get to that shortly. We're short on MSTR just momentarily and just for a while. It's a hedge against the long Bitcoin trade, which now seems to be unnecessary. We'll look at the Bitcoin chart shortly. But nevertheless, we got some good profit on this. We got in at 400 round, and we closed on Friday at 369. And we're currently trading in pre-market at 370 something. So in profit, and basically if we move back up to that area that we got in, we can get out of that trade at break even. But whilst it's open, and whilst it's at no risk really, it's a kind of a hedge against the long Bitcoin trades. Now I'm going to go across to Bitcoin. I'm not going to talk about Ethereum or XRP. Those will follow suit, but we do have long positions, of course, on Ethereum. That's moved up dramatically, very pleasingly, and XRP has just been languishing. We have long positions on all of these. These are my XRP positions, quite a lot lower than where we are currently trading, but I don't like the way this is going sideways, barely holding these order blocks, barely holding the 200 and the 50 period moving averages, and looking a little flaccid. Maybe this is a little bull flag and we'll bounce off here today. I don't know. But yeah, so that's it. Now, before I get into metals, I'm not going to talk about those. We'll talk about Bitcoin. Bitcoin just merrily going along the trend line really now in a very civilized and orderly manner, which is a little unusual for Bitcoin. You can see how many positions I've got in here. And these have all been added as we've rallied. I'm not buying the dips on Bitcoin anymore. I'm adding to rallies. And so my last tranche was added in here at about 106. We're currently trading at 109.5. And we've got positions all the way up this rally. First one down here at 74, I think it was 74,400. So that's Bitcoin. I'm looking for this to move much higher, and I don't know where we could get. Don't ask me. Have no clue. 140, 150, 120, 200, 300, 500, no idea. We've got blue sky territory above us, and we're at all-time highs. This could go a lot higher, or it may just have to retrace and come back. If it does do that, I want you to bear in mind that we have not revisited the breakout point, and I hope we don't have to get down there. That's the crypto Moab, big level, held above it, broke up above it, held above it, broke down below, held below for ages and ages, and then smashed up through it and formed this rising trend line. All the moving averages are below us, the 20, not too far below actually. We need to get further away from that. This is showing that we're not really, sounds like someone joined, thank you very much. Someone became a member, thank you. I just saw a little notification, should have shown it on the screen. But, or maybe it's a super chat or something like that. We'll get to that now. But yeah, so just moving up really, and the 20 period moving average right here, when we have a big strong move, look how far we get away from the 20. You know, these big moves, we get a long way away from the shortest term moving average that I look at, the 20 period moving average. And right now we're barely holding above it. So we want to see some more impulse moves going on here, like we saw there, and like we saw over here. We want to see us getting away from that 20 a little bit and making some space. But overall, it looks fantastic. One more thing I must caveat with, these very neat trend lines on any chart, any instrument, when a trend line is too long and too neat, and unless we get going quite quickly from here, and sort of get a big surge moving up, this neat, clean, orderly trend line is begging to be broken to the downside, and maybe we have to get back down to 100,000, the big support, big round number, big psychological number, and maybe even some of these moving averages down below us. There is a CME gap somewhere at about 96,000. It's not shown on this chart, but if you look at the Bitcoin futures chart, you'll see there is a small, tiny gap. Bitcoin doesn't always fill its CME gaps. Not always, actually. A lot of people think it's a matter of course. It's not. Bitcoin often leaves gaps behind, like other instruments do too. So that's it. Now, the other things on this page, we're short on gold. That has not changed. We're just sitting on this short position. One from there, and that one's in profit. That one's a bit out of profit. My target for gold down here at 3,000, plus minus 100 or 2, above or below. And then after that, down into this next big support area, super duper breakout support, previous high level and the breakout level, and a big order block. So once again, like the other instruments that we've talked about, even though gold has broken out, we've had no retest. Gold often will surge for a few weeks, months even, and then retrace and consolidate for a few weeks, months even, before the next leg up. My overall direction idea on gold is still bullish for sure, but I'm looking for a retracement down into these levels to get more long positions and to reverse the short position back to long. Now, this is a counter trend trade. of course. We're in a big, strong bull market on gold. Any counter-trend trade is more risky because we're literally just going against the trend. And because of that, I've also got a long position on silver. And we've talked about this in almost every video. We've managed to do this 3 times now. We've been short on gold, but long on silver simultaneously. And we've managed to close all of those trades in profit, the short gold and the long silver, even though they're both metals and they both should be bullish. They're not trading at exactly the same rate. And the gold-silver ratio is leaning towards in favor of silver. So naturally, gold is, if that ratio goes up in silver's favor, obviously gold is going to lag behind silver. So we have a long position on silver, offsetting. It's not the same size as the gold position, but it's offsetting. It's a risk hedge. It's a preventative measure. Just in case gold goes gangbusters, at least we've got the silver trade on, which will go with it. So I'm going to adjust these hedges at some point when things start moving. And it might just be when gold gets back down to $3,000, maybe silver's just gone sideways or held up quite firmly. And we're able to take profit on the gold trade on the short, get long on gold, remain long on silver, and profit on both of them to the upside. We're also long on copper after a nice, pleasing little move. I never thought I'd be long on copper at this time of the year, in this sort of market, with all this uncertainty and doubt around and tariffs affecting all sorts of industries, particularly metal industries, iron, copper, zinc, all that sort of thing, palladium and platinum, everything that's used in production, everything that's caught up in this tariff war between the various countries that manufacture things that need these commodities, like China, basically China and the US, and maybe South Korea, places like that, where all of this stuff is being used up. And of course, in industry and manufacturing, wherever that's going on, and building and so on. So I didn't think I'd be long on copper right now, but we did have a breakout out of this level. We broke out through the 20-period moving average. We broke out above the 50-period moving average. We're now in a bull market if you use all the moving averages as a reference. So we're long on copper. Did dip back down a bit today, holding the 50-period moving average. Let's see how far we can go. Can we get back up to about $5.20, $5.30? I think we could, given all the right circumstances. Sort of a double top here in the sort of low fives. And if we can bust and hold above there, we could get up much higher, maybe into the 580, maybe closer to $6, something like that. So that's copper. We've covered currencies, we've covered stocks, we've covered metals, we've covered crypto, natural gas, uranium, oil, covered all of those. And then going across to the rand, someone asked me, I didn't know anyone's trading the rand against the South African rand against the US dollar. This is the dollar rand. And despite everything that's going on in South Africa and their aggro with the US, and it's all over world news. If you haven't heard of it, you haven't been watching the news. But the rand inexplicably continues to strengthen, and it started way back at the beginning of April. Despite everything that's going on, I don't trust this move at all. We're long on the dollar South African rand. We're long on TLT, just ticking up a wee bit. And in pre-market, we're trading back up at around 85. We're long from about 88. And I don't know what bonds are going to do. All I can say is if you look at the 10-year yield, maybe not the same as the 20 and 30, 10-year yield kind of holding below that whipsaw swing high. And if you ignore that whipsaw, take that sort of pink-purple blob out, and look to the left over here, this sort of level, probably a resistance level. I can draw a line across there, and maybe we can see the 10-year yield moving down right across here, something like that. So we actually just reached the top of that swing high there, that sort of level, the bodies of that swing high, just the top of the bodies of that, cutting off the wick, of course, we just touched there as well and trying to move down. If this moves down, we should see TLT move up. And generally, I don't know if we'll see a recovery at all in the treasuries, but I'm hoping that we will. And of course, many other people are too. We have nothing on the VIX. I'm looking for a move down. It's quite high right now, still above 20. I poo-pooed this trend line, my own trend line, which I drew in a couple of weeks ago. We talked about this in the last live stream, I think. And I poo-pooed my own trend line that I drew in, saying that VIX doesn't really trade off trend lines, which it doesn't. But it did bounce off it and moved all the way up to about 25, and just a bit of a spike high there. I'm looking for a move back down into the 12s and 13s to get long on the VIX. And at that point, perhaps there'll be a really good opportunity there again. We've only been trading the VIX sporadically, maybe 3-4 times a year, and we look to buy at extreme lows and exit at extreme highs. It's not something I'm in most of the time, not something I'm particularly interested in trading, unless there's an opportunity right down at the bottom. Right, going across the softs and grains, someone asked about cocoa this morning, and yeah, all I can say is, the question was, should we be hedging cocoa right now? It depends on your position size. I don't have enough position size on this to worry about it right now. We did turn around at the top, the top of this range, where I said I'd be looking to sell, so we sold there, and you'll know that because I posted up in the last videos and on X as well. Nice spike high after I sold, nice wick candle, one down, one up, reversal pattern, and moving down. Today, we're just forming a bit of a reversal candle, but that's just a small retracement. Someone said, should we be hedging right now? I don't think so. There's no real major support at this current level. This is a natural sort of bounce retracement. My target for cocoa, right back down to the bottom of this range again at about 7,000, and a break, maybe a bounce off there again, who knows. But if we do have to bounce again, maybe back up to 9.2, and then back down to the bottom of the range, through there, and eventually much lower. So that's going okay, in my opinion, and unless something dramatic happens, that should carry on moving and edging downwards. We're also short on coffee, and pretty similar sort of picture. We're approaching our first area where we might consider hedging or taking profit, where we did last time from the previous shorts. So we resold at that level there and coming back down towards that line there. Back down to the channel top, first area of support, channel bottom, second area of support, and then below that, a break below there should take us into a much more interesting level, somewhere down into this big conglomeration here, much more sensible at about 250, something like that. So that's coffee. And then quickly, the other softs and grains, sugar's coming down, as it often does when the price of oil comes down, and simply because sugar provides an alternative fuel source, and when when oil's cheap, we don't need as much methanol, ethanol, any of the other oils that sugar produces, and so the sugar price can come down as well. So it's not just consumption for food, but there's also other things that sugar is used for, and right now it's not in great demand. Moving down a bit, but we're still long on that. We have no position on soybeans. We took profit at the top of this line a couple of times now. We've taken profit on at that level twice, over there and over here, and we're moving up. So once again, if we, basically looking for soya to move up, and maybe on a break above that level and a retrace back to the top of it, we could look to buy soybeans. So basically something like this. I'll try and draw a path for you. So something like that. Don't get in when it's up here, all right? If soya breaks out and ends up over here, don't get in there. Wait for the pullback to the trend line, the bounce off the trend line, and the resumption. Target somewhere up around here at about 1,200 to 1,300, somewhere around there. Sort of normal sort of price where soybean likes to hang out. We're long on wheat. It was going quite well for a moment, and it's just sagged down today again. So, I think generally it's going to be okay. We're right at the bottom of this falling wedge. It's a very strong and powerful reversal pattern, but you can see we could stay in this wedge forever, even all the way into next year, into January 2026. We would still be in the wedge if we just dribble along here into the corner. Hopefully, we'll have a spike down to the bottom again, if we have to visit the bottom again, a wick candle or a big reversal pattern, and then a break through the top. If and when we break through the top, I'll add some more positions onto our existing long wheat tranche and look to build up that position a little bit bigger. So that's wheat. Orange juice, we have no positions. Cotton, we're long, and corn, we're long. That's just moving up quite nicely as well. And that's it, folks. I think that's covered basically everything in a very monologish sort of fashion. And we're now at 10 past, so we've got a few more minutes. So good day to all of you. Just going to greet some folks here. Fariba, nice to see you. Martin, we've already greeted. Joy Deep from India, lovely to see you as well. Robert from North Carolina, and Alju sold natural gas at 327. 327, okay. You're a bit out of the money on that one. Stream quality is good. Thank you, Robert. And Luna, gold, we've talked about gold. Labs is great, good move. Thank you, Steve, much better. I hope we'll see when the recording comes out, and I've got to try and get some shorts and stuff and upload it to the rest of the YouTube. Hopefully the video quality is way better. And good to give you a take on cocoa and last week's moves, very much appreciated. Okay, Steve, we talked about cocoa from cold and wet UK. So Steve, hopefully I've covered everything that you've requested on cocoa there. Good day, Amit. Mystery. Hi, James. Could we run through shorts on the DAX? Okay. Again, Amit, if we haven't talked about DAX sufficiently, let me know if there's something I haven't covered for you. Good day, Robson Jr. Good afternoon. May you look at platinum. Thoughts on platinum? All right, let's have a look at platinum quickly. And let's go to the metals chart. I'll use my copper chart just to have a look at. Generally don't like the platinum chart, but let's have a look in any case. And I'm going to use the Oanda chart for this. Yeah, so platinum like palladium. If you remember, we were long palladium, and we got a really good profit on this similar move on palladium. We didn't buy platinum, but we bought palladium. Palladium did exactly the same thing, and platinum has now broken out very similar to palladium. But we've only got, if you just have a look at this, really, it's just not an attractive instrument to trade. As far back as the eye can see, literally on this chart, we've been stuck in this range. Unless you're a range trader, selling the tops and buying the bottoms, you wouldn't really be interested in trading platinum. I'm certainly not. And given that logic, right now, you should be selling platinum, not buying it. Okay, so we're at every time we've got to this level, it's moved down to the bottom again. Every time we got to the bottom, it's moved up to where we are currently trading. The same with palladium. Let me just show you that. And I'll show you the trade that we took. In fact, I think we took it, I might have taken it one of these live streams, XBD USD. I think we were actually here when we looked at this last. So palladium did a very similar thing. We got long down here and we got out at the top with exactly the same thing in mind, that we've been trading. It's a little bit more technically pleasing than platinum because we've had a move down and we're basing and trying to form a bottom. Platinum's been on this same period, been going across the page endlessly and provides a range to trade if you're a range trader or a day trader. But I'm a swing trader. There's not much going there for me. This one looks better to me. We are trying to form a bottom. Palladium may come into more vogue in time to come. There may be more coming onto the market, though, if Donald Trump does deals with Ukraine and with South Africa now, talking about rare earth minerals, platinum, palladium, and a few of the other EMs that South Africa happens to have, as does Ukraine. And if that all comes onto the market, it's going to obviously take time, but it's markets prepare in advance. So if that comes onto the market, maybe there's a bit more supply, maybe the prices come down again, maybe that range just goes back down to the bottom on platinum, and maybe palladium, as it already is doing, will just move back down to the bottom of the range. So I don't like either of them. I'd rather be trading gold, silver, and copper. Actually looks a little bit more interesting, as we pointed out earlier, compared to the way it has been looking until now. Just get my copper chart up here properly. So there's copper, and there's our position. So we're long on copper, long on silver, and short on gold, and all of those are in profit. So that's pretty good. I hope that answers your question. I don't like platinum at all. And yeah, so we've talked about, so that was Robson. Thanks for the question, Robson. I appreciate it. Martin says, I must practice hedging first. Okay, no worries. WK, hi James, can you clarify when you say order blocks, what do you exactly mean and how do you use them? WK, I can't do that, mate, now. It's going to take way too long, but basically it's an area of supply or demand. It's an area of consolidation, an area of accumulation or distribution where the market forms a particular sort of formation at that level. You can draw these in on your chart automatically, or you can do it yourself. If you want to do it automatically on TradingView, there's a function called, or an indicator called MB-MSB. That's is it OB or MB? OB-MSB. And you can use that instrument to simply set it up yourself. But basically, there's form areas of support and resistance, but it's a much longer thing to go into in more detail. Somnath from India, very much grateful to greet you too. Welcome to the stream. Thank you for your support on X as well, Somnath. I appreciate that very much. Sidba Goel, hi James, natural gas is going up. Yeah, I've got a chart on my own screen. I can see that, sure. I've also got charts. I can see what's going on with natural gas. Solana, I don't trade Solana. Sorry, MP. I don't have any thoughts on it. I never look at it. So I couldn't give you anything sensible because whatever I say is going to be uninformed by definition. Any thoughts on platinum? We talked about platinum again. I'm not going to cover that again. Robert, thank you very much. Robert says, thanks for your time and generosity with these sessions. Pleasure, Robert. I appreciate your thankfulness as well. And if you are enjoying this, folks, I'd really appreciate if you subscribe to the channel and also consider joining the channel. It costs $1 a month, and we're doing more and more live streams for members only. We're going to be doing giveaways, special topics, interactive sessions, webinars, Q&As, all sorts of things, giveaways, even some merch, which my team is busy preparing. So all you got to do is click the join button below this video right now. Just click on it, and it's going to ask you for $1. And in a month's time, you'll have to pay another $1. And in about 5 months' time, if you did save all of those dollars, you'd be able to buy yourself a coffee. But for the price of a coffee, you can get 5 months on the YouTube channel. Just click it below the video right now and join our community. I'd really appreciate that. And that's the best way you can support this channel. All right. Good day, Emily Trading. Very lovely to have you. High quality video. Fantastic. I'm glad it's working well. Martin, great content. Thank you very much, Martin. Nando, Uzumaki. My eyesight's a bit bad. Actually, one of the problems with this software is that it's very, very small on my screen. Nanutu Uzumaki. Where would you go long on wheat and platinum? I wouldn't be trading platinum, as we've talked about wheat and platinum, actually. I went into wheat in some detail, talked about that falling wedge. You can see where the bottom of that wedge is. And platinum, I've got no interest in trading right now. Thank you, Steve. Fantastic stream, you say. And Hamza, Milan, or Mian. Thank you, James. Very well structured and clear stream. I'm glad it's working, folks. I was very frustrated with the previous software, and I just, no one wants to see a blurry, horrible picture. Even if it's not me that matters, it's the rest of the stream, the charts. But it's good that you can actually see me a little bit better as well. Is it too late to short gold? Carlos, you can short gold anytime you want, mate. It's moving down. Maybe wait, if you want to short gold, wait for a pullback. I don't know if gold's going to carry on moving down. That's why I've got a hedge. That's why I've got a long silver position and a long copper position. Both of those are hedges against my short gold position. So obviously, I'm not totally convinced that gold is going to carry on moving down. My long-term picture on gold is bullish, and any counter trend trade that we take is risky, and therefore I'm hedged. I don't know what your structure is, your hedging, or if any at all, or your position sizing, your account size. So I can't advise you on that, but I just would caution you that we are in the bull market on gold. My bear market position, my bear position is a risky. It's not a full size position, and it's also hedged with other metals which I'm long on. And that's it, folks. Which commodity? Last question from Somnath. Which commodity is harder to handle? I would say right now platinum. Platinum looks terrible, as I just pointed out. But I tell you what, natural gas, the one that everyone loves to trade, and some people love to hate, is probably the most difficult instrument to trade. And very often people blow their accounts trading natural gas. I've seen it umpteen times, and there's absolutely no reason for it. I've got a whole course on natural gas trading, which is available. It's only $200 or $300. Click on that link, download the course, learn how to trade natural gas, stop throwing your money around and wasting it on trading instruments that are too difficult or you don't understand properly. Look at Bitcoin going gangbusters as we're talking. Fantastic. Above 100,000 again for the first time in about a week. In fact, first time, about a week or so. And then quickly just going back to natural gas while we're here. It's not moving up anymore. There we go. I knew this was going to happen. I didn't want to actually predict it, but I did mention it. I said a spike up into this order block. If you remember, right at the beginning of the stream, I said wait for a spike up, a reversal candle into this block here, and then we're looking for shorts. At some point, if this 4-hour candle closes like it is, and maybe even just below that trend line, I will consider adding some more shorts to my existing position and start beefing that up a little bit. Target for natural gas, $3. And then at that point, we'll exit and potentially look to go long. Trading this range, natural gas is a range traded instrument. It's not a trending instrument. Like the VIX, if you put a VIX chart and the natural gas chart on top of each other, you wouldn't be able to tell the difference unless someone pointed it out. They're not they're not trending instruments. They go along sideways between a small-ish sort of range, and occasionally they spike up out of that range. VIX and natural gas, although not related, don't tell anyone, and don't tell me or say to yourself that James said natural gas and VIX are correlated. No, they're not, but they have a very similar trading pattern and structure. And so When we get down to $3, that's the bottom of the range, and we won't be looking to continue short at that point. We're then potentially looking to long that and go back up to $4. And that's it. It charges you $2.99 a month. $2.99 a month. I don't know what you're talking about there, Fariba. Here's my Bitcoin hat. Bitcoin pizza. I don't know how that comes out on the screen. There we go. I'll wear it for you. I think it was you, Steve, or was it someone else who said, you need to wear your hat? Well, I'm wearing it. I don't like wearing caps, but actually it's quite nice. I've just opened my cold storage wallet, folks. Bitcoin, well, just set it up, and the actual device is on its way. And so that's another topic to talk about at some point. I'm getting pretty excited about Bitcoin, not as a trader, although I trade it every day, but I'm starting to move some of my money into Bitcoin as a store of wealth, which is something I also never thought I'd be saying, but I am. Fariba, I don't know what you're asking. You're saying it charges you £3 a month? I'm not sure what that is. And then Emily is going to help Naruto check out something for her and contact by email. Thanks so much, folks. Have a great trading day. It's been wonderful to see you. I'm glad the software is working. Make sure you join. Make sure if you don't want to pay $1 a month, I think Fariba's saying it's £3 a month, £2.99. I'm not sure why. But if you don't want to pay that, that's fine. I don't expect you to do that at all. But I do expect you to subscribe to the channel if you're enjoying the content, because only about 60% of you are currently subscribed. And if you subscribe, it helps the channel, helps us do better, get better software like we've done, and improve everything and get more excited about it in general. So have a great trading day, folks. See you in the next video. And members, look out for the next members only video.